Just got to start with the whole virtual thing. It's good to see an IPO happen, but is the experience and the process much different virtually than it would have been if we were talking to you on the floor today?
Well, we certainly probably had a little different plan in mind around our roadshow, but it certainly feels great. It's exciting to be a first in terms of a virtual, and it's been in the works for a long time, and it really reflects a lot of hard work of all of our associates. We've been building a business for 35 years. It's been focused on providing consumer solutions for what they value most, their families, their health, and their property. And being able to launch this IPO in this type of environment, I think really reflects the solid fundamentals of the business as well as the resiliency. So we're very excited.
Yeah, I think a lot of our viewers probably are familiar with your ads, which have been running on our air for a long time. I'm curious, you are making the argument that even in the framework of this virus, that the digitization of insurance continues, even accelerates as people try to compare products virtually. Can you talk about that?
That's right. Our business model is what's called a direct-to-consumer business model, where we are really combining in a hybrid model, both digital as well as human advisory services. And that's been part of our model for 35 years when we launched really the first direct-to-consumer term life exchange in 1985 with our founder, Charan Singh. And then we've extended that into two other high-growth verticals, senior healthcare and auto and home. And our senior business is really, riding the waves of very strong demographic tailwinds, as over 10,000 seniors turn 65 every day, as well as the popularity of Medicare Advantage and Medicare supplement plans that we distribute. The way that consumers want to interact is also shifting, to your point, being able to do research online, but ultimately connect with a highly skilled agent that can help guide them through the process.
Yeah. And certainly you do seem to be right in the sweet spot in terms of the industry, which I think is being reflected in how the stock is trading up 40% right now, essentially acting as this matchmaker between the insurance companies and consumers, taking that commission from the insurance companies. Given all the impacts we're seeing right now from this coronavirus pandemic, what has consumer activity looked like, and what has the ability to strike deals with some of these different insurance companies actually meant?
Yeah, great question. Overall, with respect to COVID, we have seen heightened consumer awareness for insurance products, especially the health and protection products that we distribute. So we're seeing that in terms of kind of our lead generation and marketing capabilities. But I think now more than ever, consumers want to make sure that they're on the right plans for their specific needs. I'd also say, regarding the shift in terms of distribution, historically there's been a lot of in-home, across the kitchen table selling of insurance. In our model, consumers benefit from the ability to do research online and then connect over the phone. And we think that trend is going to continue to exist for some time. And finally, I'd point out, we're excited about this IPO. It gives us the capital we need to really supercharge growth for the company. And part of that is really hiring additional highly skilled agents. And certainly there's a lot of great, hardworking Americans that are out of employment right now. And one of the things that we're seeing is very strong job applications. We're up over 3 times our kind of normal levels, and we look forward to being able to help in our own small way.
Hi, Tim. You talk in your S1 quite a bit about analytics and the need to control your marketing spend and just deliver a better experience through using data and your proprietary algorithms. I haven't been able to figure out, though, to what extent you're active in the cloud, to what extent you're using AI tools from some of the major platforms to enhance that. Talk to us about your strategy there. Are you partnered with any major tech providers in the use of AI tools? And how do you intend to get smarter with those algorithms to enhance the business?
Yes, we've made significant investments in our technology stack, not only things that are helping our agents become more productive in tools that ensure that our underlying clients get on the right plan and the right carrier, but also really made a significant investment in data science. That has helped us really help from lead generation to customer retention to cross-sell capabilities, given the breadth of our 3 different insurance lines. With respect to, who we've partnered with, we actually have worked with Amazon in terms of cloud, which has allowed us to be very flexible in terms of our approach to technology.
Lloyd's of London recently came out and expected, or I guess called that coronavirus could be the largest loss on record for the industry. Where do you expect, and I realize this is kind of a broad question given that there are different lines of coverage that you're involved in, but where do you expect rates to ultimately go from here?
I think with respect to our carrier partners, I think they're obviously wanting to work with us at an even more tightly and integrated level. It's always been a hallmark of the company is the fact that we're managing over 50 different high quality blue chip insurance carriers, and so we continue to work with them to help them through this time, and also they're looking to continue to grow their businesses as well, and direct to consumer businesses like SelectQuote have proven to be very highly resilient, and I think we'll continue to partner together as we work through this together.